World oil production has peaked and is set to fall by half in the next 20 years. A global energy report paints a bleak picture and warns of social unrest and even war. So just how close are we to running out of oil? And are we too late in finding alternative fuels? This is Inside Story. Hello, I'm Darren Jordan. Well, it's a report that's bound to send shivers around the global economy. Oil production has peaked, and in the not-too-distant future, we won't be able to produce all the oil we need. The report says we're dangerously close to running out. But what's worrying the experts is that the doomsday scenario could be closer than predicted. But while one report says the wells are drying up, other experts say there is enough to go around, and it's much ado about nothing. Anar Verji has more.
Oil is running out. That's the warning from European researchers. The Energy Watch Group says oil production hit its peak in 2006, and that the world stock will now decline steeply, creating an energy supply gap they claim the world is not yet prepared to fill. The group says oil production will fall by 50% over the next 2 decades, and that extreme shortages of fossil fuels will lead to wars and social breakdown. But others, including some oil companies, claim production can keep up with demand and believe that there are vast untapped oil reserves that can keep the oil supply flowing. Some estimate that the Arctic region holds 1/4 of the world's untapped oil and gas reserves. Russia planted its flag at the bottom of the Arctic Ocean in August, claiming rights to the seafloor and any oil there. But other countries in the region argue they also have a right to possible Arctic reserves. They are supplies that could prove invaluable as demand for oil continues to grow. The booming economies of China and India are also hungry for energy, with the International Energy Agency saying China will become the top oil importer by 2030, along with the United States, meaning that whether or not oil production has peaked, the demand for energy will continue to climb.
Well, joining us now are guests in Munich, Jörg Schindler, member of the Energy Watch Group and author of that report, and in London, MAMDOUH SALAMA, an international oil expert and consultant for the World Bank. Gentlemen, welcome to the programme. Jörg Schindler in Munich, let me start with you, if I may. If it's true, your report paints a very worrying future. How concerned are you by the findings in the report, and how worried should we as consumers be?
Well, I'm very worried because we didn't really expect such a steep decline after peak. And this is a great challenge, and I think all the world should address the problem. They should check our results, and if there are other evidences, of course, but the best evidence we've got is what is said in our report.
Jörg Schindler, let me stay with you just for a second, because you say that global oil production peaked last year, much earlier than experts expected. I mean, how did they manage to get the prediction so wrong?
Well, you know, of course, the future is always uncertain, yeah, and there are, of course, a lot of people who say even though production is in a slight decline since 2005, 2006, depending on what aggregate of oil you are looking at, that it will be possible to increase production in future. But we can't see this happening.
MAMDOUH SALAMA in London, let me come to you, because this Energy Watch report is in direct contrast to the International Energy Agency's predictions or projections, which say we shouldn't be worried about oil production. I mean, is the truth somewhere in the middle? What do you think?
We should be very worried indeed. I have done a lot of research on the peaking of conventional oil production, global conventional oil production, and found out that the peak occurred in 2006. However, if we factor in what I describe as OPEC's inflated proven reserves, then the peak may have occurred in 2004. OPEC claims to have 800 billion barrels of proven reserves. My research shows that they don't have more than 500. So if you deduct 300 billion barrels, then the peak occurred in 2004. These conclusions I gave in a lecture at the World Bank in Washington, D.C. on the 10th of April this year.
Let me stay with you for a second, because you're an oil expert for the World Bank, as you say. I mean, just take us through the economic impacts of this. I mean, how dire would the consequences be of a decline in production, do you think?
It will be very dire indeed, because as you realize, every $10 rise per barrel of oil knocks out half a percentage point of the global economic growth. Furthermore, there is a shift of economic balance now, balance of power, from the consumers of oil to the producers of oil. The projection is that this year, 2007, $1.5 trillion will be passed to the producers from the consumers. That amounts to 3.5% of the global GDP. Moreover, the petrodollar is weakening very fast, and that means that sooner or later the producers will start looking for an alternative, like a basket of currencies made up of the dollar, the yen, and the euro, to stabilize the revenue of the producers. And if, for instance, OPEC members, according to my research, have shifted from pricing their oil in US dollar to a basket of currency, euro, dollar, and yen, they would have added $52 billion to their revenue in 1952, in 2005.
OK, let's just bring in back Jörg Schindler there in Munich, because official industry estimates put the global oil reserves at a figure equivalent to just about 42 years at the current consumption rate. I mean, does that mean that the world will run out of oil in 42 years?
No, because this conception of production to reserves ratio is very misleading. Yeah, because in actual fact, this would imply a constant production over time and then a sudden end to oil production. This, of course, is not realistic. It can be observed nowhere in the world. What you have is a sort of a bell-shaped curve, production rising and then going down again. So what we will see in future is not the last drop of oil, the end of oil, but every year a little bit less than the year before. And we have got used to every year a little bit more than the year before. And this is a fundamental paradigm change we are facing.
What about current conflicts, Jörg Schindler, like the Iraq war and the standoff with Iran? Because these are countries that supposedly have huge reserves under the desert sands.
Well, how much oil there really is rather controversial. We think that there is much less than is stated, for instance, in many public statistics you can read. But still, with regard to what is left, of course, it is important. And, well, nobody knows for sure, but I think it is very significant that even the former financial officer Greenspan said the Iraq war was for oil. So I don't know.
Let's just bring in back MAMDOUH Salami there in London and just talk about this issue of demand, because this is all about supply and demand, I guess. I mean, how are the oil-hungry economies like China and India, which have rapid rates of growth, how are they affecting demand, and is it set to get worse, in your opinion?
In a way, yes. For instance, the global demand for oil is growing between 1.5% to 2% per annum. The bulk of demand is coming from India and China and the Asia-Pacific region. Naturally, China needs to achieve a 10% economic growth per annum. This means that they will continue to consume oil at greater rates, maybe 6 to 7% increase per annum, in order to provide job opportunities for their people. Naturally, this continuous global demand is impacting on the oil price, increasing it, and of course on the global economy as such. But the rise in the oil price is not only due to the global demand, it is to the fact that the world is consuming 31 billion barrels a year. That is 86 million a day multiplied by 365 days, and they are only finding less than 6 billion barrels. Furthermore, there are a lot of doubts about the proven global reserves. The BP Statistical Review of World Energy claims that there are 1.2 trillion barrels of proven reserves. My research and studies have shown that the proven reserves are less than 108 billion barrels if you deduct 300 billion barrels of OPEC's inflated reserves.
OK, gentlemen, stay with us, won't you? Because it's time for a short break now. But when we come back, if the oil is running out, what are we doing about finding alternatives? Stay with us.